Okay, we are ready. So good evening, everybody, and welcome back to Walks in Wall Street. We are sitting in the WeWork office here in Brickell City Center. So it's a little bit of a new scenery. Usually we are starting off our live streams from the 200 Southeast Financial Center in downtown Miami. But tonight we are across the other side of the river here. September 24th, 2022, we are tracking the potential hurricane that could slam into Miami, but I just checked the weather forecast and supposedly the storm seems to be drifting off to the westernmost side of Florida. I think it may hit Miami. I think it may miss Miami altogether. I think Tampa, Florida, and maybe even the Panhandle are probably going to hit or deal with most of the issues. So, I mean, I guess it's good news for us, but I think it's too early to tell anyway, because supposedly the hurricane is supposed to arrive here in Florida Tuesday into Wednesday. But tonight, everybody, we are going to be talking about the housing market a little bit. Usually Monday through Friday on the live streams, we have a dedicated topic in relation to the financial markets. Usually Saturdays, we sort of hang out, walk around, take it easy. But I do have a couple things to cover, okay? We're also going to talk about cybersecurity a little bit. We're going to talk about zero trust cybersecurity specifically. And then tomorrow, which is Sunday, we will be doing our weekly Markets a Look Ahead live stream where we will be talking about all of the major events coming up in the week ahead on Wall Street, from corporate earnings, from economic data, the whole 9 yards. So welcome everybody, we'll get started. Let me put away my laptop and then we will see who we have in the chat. Still having problems with the laptop, by the way. It only works when it's plugged in. So I'm living in the Stone Ages here. But hopefully everybody had a fantastic Saturday so far. Beautiful, beautiful day in Miami. I guess it's considered the calm before the storm, I guess you could say. All right, let's head out. But first, let's see who we have in the chat, my friends. I see Linda Silva. I see Otto, Jw Mar. Good to see you. Raphael is here. FredX. Good to see you, FredX. I guess I'll give you guys a little bit of an impromptu tour of the office here. Again, this is at the Brickell City Center. I see Savvy, Austin City Limits. My friend British Gray, good to see you guys. So this is sort of like the common area, right? This is a kitchen. Usually during the weekdays, you know, you'll have your like coffee, espresso stuff right here. You'll have, you know, your kitchen. I believe they have some sort of a cold brew thing on tap here. But this is a pretty nice WeWork office. Once again, this is located in the Brickell City Center. So if we get close enough to the window, you could actually see, I guess, some sort of the skyline of Miami. Maybe it's a little bit too glary. But let's head out, everybody. Sweet Country Living in Michigan is here. Frank Gonzalez says, Tom, saludos from Nashville, Tennessee. Hey, Frank, thank you for that, my friend. Appreciate you. We're going to head down now into Miami. So just bear with us. We may go out because the elevator's internet access is not the best. So we'll see. We'll get it done. Yeah, I got to go to 1. Hey, Valentina is here. Good to see you. Capital Post. Joe Driver, Abdullah, Cindy Foley. Big Talk says, hello, Tom. You workhorse. Good to see you, Big Talk. Devin is here. Valentina, Rex A. Good to see you. All right, we are finally out of the office and back into Miami. You know, it's so humid outside tonight in Miami that after I go outside from the air conditioning, my glasses actually start to fog up. That's how crazy humid it is out tonight. Dee says, hey Tom, do you ever take time away from the office? Yeah, absolutely. Definitely take time away from the office. You know, I actually spent the vast majority of the day today in North Beach, which is a little bit, I mean, obviously, north of here. Easy way to get there is you take the S bus. But yeah, I actually spent, I would say, the vast majority of today in North Beach near 72nd Street. Got some exercise in. I actually was swimming for about an hour. The water was crystal clear. It was fantastic. But good to see you guys. Hey, 925 says, hey Tom, my birthday is tomorrow. I'm gonna have some friends over and relax, talk about prepping for the hurricane. Awesome, dude. Happy birthday to you. And I hope you have a fantastic birthday, one of the best you've ever had. Thank you for being here tonight, my friend. Jay Sully, Fred X, good to see you. Buff 20 says, Tom and Chad, are you preparing for Ian? Yeah, so originally the plan for today is I was gonna rent a car to get some hurricane, I guess, foods and, you know, non-perishable items and things like that. But as I've been watching the weather, right, I've been watching the Weather Channel really, really closely. It turns out, let me give you guys a shot of the Miami Tower here, all the way in the distance. You know, as it turns out, if you look at the weather models, it seems as if the hurricane, now I know we should never anticipate this, I know we should prepare for the worst, which I am, but it looks like Hurricane Ian is actually gonna miss Miami altogether. It seems as if the worst of the storm is probably gonna be Tampa, Florida, maybe up there near the Panhandle. And depending on where the, I guess you can, what is it called? The jet stream? I'm not a meteorologist, so definitely take with what I'm saying with a grain of salt. Depending on, I guess, the jet stream, it could possibly push it all the way over to Louisiana. So I don't know. Hopefully it misses us. But we'll see. Hey, Blue Crew says, good evening, Tom. Indiana watching. Good to see you, Blue Crew. Welcome. Hope you had a good day. You know, a lot of my friends in New York were messaging me today saying it was pretty cold. Pretty cold. I think it only got up to a high of about 60 degrees in New York. It was beautiful weather here in Miami, though. Probably about 80 degrees. Probably still about 80 degrees, maybe like 75, 77. Western Mass, Dave is here. Good to see you, Dave. The LT Prod says, happy hurricane birthday. Good to see the LT Prod. So this is directly behind the Brickell City Center. Looks like it actually may rain here in a bit. So obviously we do not have specific topics of conversation as it relates to the financial markets on Saturdays. But I did want to talk about a couple things, because as I was reading the Wall Street Journal today, there was two specific articles that really stood out to me. Now, oftentimes on the stream, we'll talk about cybersecurity in general, right? And how we've been seeing this accelerating emerging trend of cyber attacks and cyber hacks. And one of the main articles, it was actually the cover story of this weekend edition of the Wall Street Journal Exchange. It was how businesses and companies and even nation states, countries in general, are going to have to be forced and required to invest in a specific type of cybersecurity infrastructure called Zero Trust. So if you think about the very, very beginnings of traditional cybersecurity infrastructure back in the day, it was what you call castle and moat cybersecurity. So back in the day when you had your very, very simplistic network architecture, and when many of your employees weren't working remotely, when everybody was pretty much working in the office, either on desktop computers and you have all your own servers in your office. Well, the main way to secure your corporate infrastructure is just put up a firewall, right? So if you put up a firewall, anything on the outside of that firewall is deemed a potential threat, and anything on the inside, you know, you're good to go, right? It checks out, there's no problems. Well, the problem with today, let me make sure I don't get hit by this car. Well, the issue and the challenge that we are facing today specifically is we don't live in a very data center centric world anymore, right? Many of our applications we access via public clouds. So when we're accessing all of this, let's say, proprietary information, not only are we accessing them in public data centers and public clouds, but we're also accessing them outside of a traditional on-premise infrastructure, right? We're working remotely, especially during COVID, and you have multiple endpoints. And essentially an endpoint is, you know, like any device, right? You could have a cell phone, you could have a computer, a laptop, or a tablet, any sort of device that you're accessing proprietary information from, that is called an endpoint. And ever since the late 90s, early 2000s, we've seen an explosion in smartphones, in tablets, in computers, right? So there's many different endpoints, which is good because it makes productivity more efficient. The downside is every single endpoint that is added, that is another vulnerability or potential vulnerability for a hacker or attacker to access your corporate infrastructure. So there was a really, really good article in the Wall Street Journal about something that we talk about all the time, which is following a trend and following the money, right? So if we're thinking about an investment specifically, or as I like to say, a potential career path, you will really want to follow the vast majority of the spending, right? And I always categorize products and services into two distinct categories usually. Number one being a nice to have product. You know, during a recession, those products typically don't perform well. Then you have a must-have product. But I think, and I've said this many times, you know, I think cybersecurity is carving itself out to be a requirement. And if you read that Wall Street Journal article today, I didn't have enough time to program it in the Nightbot. The article literally said exactly what we've been talking about on the stream for the past 6 months. So really, really interesting predicament to see this sort of unfolding before our eyes. You know, we were talking about Uber, how they were unfortunately victim of a cybersecurity attack. But now most recently, as of Thursday night, a major Australian telecommunications company has gotten their corporate infrastructure compromised. Now, we don't know if the specific hacker group is requiring or requesting some sort of ransomware. Oh, you can go ahead. Thank you. Is requesting some sort of a ransom or something like that. That is yet to be seen. But we'll talk about that a little bit later on in the stream. Hey, Sabrina Fair is joining us. Good to see you. Eve says, good evening, Tom. And to all of our viewers, God bless everybody. Stay safe, guys. Thank you so much. I appreciate that. Hopefully you're having a great weekend. Jay Sully says, you said a major telecom company. Yeah, so a major telco in Australia is unfortunately undergoing a major cyber attack. And it just goes to show, I mean, look, as these cyber attacks become more, I would say, common, where do we think the overall corporate spend or spending in general on cybersecurity is going to go? Do we think cybersecurity spending is going to decline, or do we think it's going to go up? You know, I think the answer there is obvious. So we'll stay up to date on potential investment opportunities and potential career paths too that open up. But Jay Sully, good to see you. Dusty Cole says, you too, Tom. Everybody affected by a hurricane, stay safe first. Yeah, I mean, Dusty Cole, the good news, and I know there's really never any good news to hurricanes, but supposedly this entire hurricane system, Hurricane Ian, may miss Southern Florida in general. Like, the entire thing may miss Miami, Florida. So we'll keep up to date on it. It looks more of like a Tampa, Florida problem. Also, maybe Pensacola, Florida, may be getting a direct hit from the storm. So we'll see. Hey, Jay Sully says, being in telecom SMB sales for years, my next move is cybersecurity sales. Yeah, Jay Sully, if I were to recommend a couple companies for you to apply to, I would check out Palo Alto Networks, I would check out Zscaler and CrowdStrike. Now, if you're in SMB sales, at a major telecom company, assuming it's in the United States, right? I would assume you either work for T-Mobile, AT&T, or Verizon. You usually are able to actually sell cybersecurity software through your specific channel partners, right? So let's say if you're selling traditional devices, especially to a larger enterprise, they're probably going to need some sort of a mobile device manager, an MDM cybersecurity solution, or an endpoint cybersecurity solution to lock those devices down, right? So during my years in working at a major telecom company, we used to sell like Zscaler products through the channel. We would sell things like a Scale Fusion, Codeproof, VMware products, things like that. And those are all very, very high margin pieces of software and extremely necessary. Those endpoint security products, mobile device management. Jay Sully says Palo Alto denied me this week. Gonna keep trying. Oh, you do SMB, very cool. Mid-market and enterprise for Comcast, very nice, man. Yeah, I mean, just keep applying. The unfortunate thing now is, well, the good news and the bad news here is you are a sales guy, right? Which is very, very good, which means if you are good and you have talent, that means you'll pretty much always have a job, right? Because the number one thing that companies need in a downturn is sales and revenue. And the sales guys and girls at companies are the particular individuals who drive that growth, right? So that would be you. But even during an economic downturn, what businesses do is they like to sort of ease up on hiring in general. And usually that hiring freeze will first start with more operations people. It'll start with maybe some engineers, maybe some customer service type jobs and things like that. But also there is a slowdown in hiring across the board. So, I mean, the only thing I can tell you is just to keep interviewing, keep at it. It may be a little bit more difficult now that we're going into this sort of economic downturn, but I think if there was one department or in an organization, a big business, that would probably be less affected by this downturn, it's probably sales, especially if you're a very, very good salesperson. Hey, Jay Sully says, I made President's Club this year. It took me 10 years. Nice, man. So where did you guys have your President's Club? Usually they'll have some sort of, usually they'll pick like a major city to do it. The LT Prod, good to see you. Moros is saludos from Buenos Aires, Argentina. Welcome all of our Argentinian viewers. We are here in Brickell, or to get more specific, Mary Brickell Village. It was a beautiful day. I guess you can call it the calm before the storm, but Harry Connor says there are rings of rain and no storm drains in Miami. Don't make rookie mistakes. All right, we'll try not to. Blue Cruise is so still watching endpoint security companies. Yeah, I mean, I just think the overall trend of cybersecurity is going to be a very lucrative one to watch. I think looking over the next 5 to 10 years, looking at specific catalysts, it's not like businesses are going to stop investing into, cloud computing, different SaaS products. And especially now that we live in a world where remote work and I guess hybrid work is becoming more normalized, you're going to need new, innovative, and creative ways to protect your corporate infrastructure, right? So just to quickly review again, and we actually did a stream I think back in New York, sort of describing a traditional network architecture, right? Or a wide area network. So if you think about just like going back to the very, very basic days of network architecture, it was called a hub and spoke, right? You would just have a very basic hub and spoke network. And with the hub and spoke network, you would secure that network with something called castle and moat technology, which is like a very basic firewall, right? So you throw up a firewall, you say anything on the outside of that firewall is a malicious threat or a potential malicious threat, but anything on the inside of the firewall could get access to all of the corporate data, everything, right? I mean, and that only really works, again, in a very data center centric world. But now when you have SaaS applications, so software as a service, when you access different types of corporate infrastructure on public clouds like in Amazon, AWS, Microsoft Azure, and the like, you need higher levels of security, especially as people are working remotely. Now, traditionally, you could extend your corporate networks through a VPN or a virtual private network. But what we're sort of finding now and taking that next step into cybersecurity is something called zero trust technology or zero trust cybersecurity, which I think probably Palo Alto Networks is the leader. And then right behind them is probably like a Zscaler. And essentially with zero trust, what you're saying is you will not trust anybody in your corporate network and verify every single transaction and prioritize based on either seniority in the business. So if a sales guy needs to access Salesforce, they shouldn't have the ability to have access to, some data monitoring platform that the IT guys access, right? So it's sort of verify once, and then if you want to access a different SaaS application or something else, based upon your permission structure, you can not have access to this particular application, you can have access to this particular application, and that sort of architecture is called zero trust, which I am very, very bullish on. I mean, I think the only thing that we need to sort of watch here is the level or the amount of these malicious cyber attacks is only gonna continue to go up, right? Not to be a Debbie Downer or a pessimist, it's just the reality, right? Cyber attacks are going to continue, and not only are they gonna continue, they're gonna get more sophisticated. There's actually hacker groups. It's not just like some 18-year-old kid with his hoodie on sitting in his basement. These are very, very well organized hacker groups, and even sometimes they're entire nation states that could launch a cyber attack against another country or something like that. So I think cybersecurity spending is going to continue. And with that, I think there's going to be a select few businesses within cybersecurity that are going to benefit and grow their corporate profits like crazy over the next couple of years. Anyway, this is my favorite restaurant in Marriott Brickell Village. This is Argentine food. Fantastic place. Yeah, Jay Sully says the ransomware events are definitely going to grow. It's crazy. Yeah, I mean, I think Suffolk County on Long Island. So obviously you have Brooklyn, Queens, Nassau, Suffolk County. Suffolk County was hit with a massive cybersecurity attack. Now, I'm not sure if they disclosed if there was a ransom. Usually they'll request some sort of crypto or digital currency like a Bitcoin or a Monero or something like that. But I'm not sure if the hackers requested that from Suffolk County. I'm actually not sure. Hey, Alec is here. Says, good evening, checking in from Marriott Hotels in Chicago. Wishing you a great Saturday night. Hey, Alec, thank you, man. Appreciate it. Yeah, we are here in Miami. I guess you could consider it the calm before the storm. Well, hopefully we don't get the storm. As of right now, it's looking like we're not going to get the storm at all, so we'll see. Zach Drew's like, hell yeah, XMR. Yeah, Monero is a digital currency that is the main value prop there, I believe, is for anonymity, right? The LT Prods is taking out a hacking or scamming call center. Would be a good use for Tomahawk missile. Oh, God. Yeah, I mean, you know, here's something that really is almost sort of unbelievable, right? So if you think about the people who work at Uber, I'm talking about some of the best tech companies you have out there, some of the smartest minds from major institutions, major Ivy League schools, things like that. You would think that these particular businesses wouldn't be susceptible to these cyber crimes. Well, I'll take it a step further. There's a company out there called Okta. The ticker symbol is OKTA. And Okta actually specializes in a very, very specific form of cybersecurity, which is IAM. And so the acronym IAM stands for Identity and Access Management Cybersecurity, right? They compete with the likes of Ping Identity, and Ping Identity was actually just recently taken private by Thoma Bravo's company, or by Thoma Bravo, which is a private equity firm. Anyway, but Okta was hit with a massive, massive cybersecurity breach as well. So you would think if you have all of the smartest people in the world working at these big tech companies, why are they still getting their corporate infrastructures compromised? And that's because these cyber criminals are very, very crafty. And the number one way that a corporate infrastructure gets compromised is by something called emotet. And emotet are these very, very pesky phishing emails. And they could be in the form of text as well, like SMS messages. And hackers are so good. I don't really want to use the word good, but I can't really think of anything else. My brain is fried tonight. But the hackers are so good that they can disguise emails that it looks like it's coming from your boss. It looks like it's coming from your client. And if you click on one of these links, right, or a PDF file that is in those specific emails, well, you're actually clicking on malware that's being downloaded onto your computer. It could infiltrate your entire company, and it could totally cripple your systems. And one of the things that these hackers do is say, okay, we're gonna lock down all of your stuff, and we're not gonna release it unless you pay us some sort of a ransom in Bitcoin or some other cryptocurrency. The problem is, I'll give you guys another look at this building. The problem is there's no guarantee that these criminals will actually release your proprietary corporate infrastructure, right? There's no guarantee. You know, never negotiate with the terrorist, I guess, is the sort of the verbiage we could use here. So it's a big problem. So if you ever get like a text message that looks off, or an email that says, hey, click this link, I want you to, take a look at, XYZ, don't click it, double check it, because it's usually probably some sort of a ransomware or malicious piece of software. Hey, we have Michelle. Hey, Michelle McGraw, good to see you. Michelle, welcome to Miami, my friend. Good to see you. I trust you're well. Vinny Castellano from Staten Island is here, welcome. Mike C says, if government protects the internet, who protects the internet from the government? That's a good point. Talking about the government, or speaking about the government, if anybody is interested in a cybersecurity sales job, I think over the next 5 years, a very specific niche position within these cybersecurity companies is selling it to public sector or SLED. So SLED is essentially an acronym for state, local government, and education. I think the budgets for IT spend, specifically cybersecurity, for local municipalities, for federal governments, are going to balloon, state, local governments. So that could be a rather lucrative opportunity for people. Hey, Andy is here from South Korea. Good to see you, Andy. Thanks so much for being here. Derek says, hey everybody, good to see you, Derek. So this is Coral Way, Southwest 13th Street. I think this is one of my favorite buildings. I'll give you guys a better shot of it, but look at how unique the balconies are architected. It sort of gives it a very, very unique appearance. So every other balcony is sticking out the opposite way of the other. JF says, hey Tom, is there any publicly traded company leading in zero trust? I would say the top two in my opinion. Now this isn't, when I say this, it's not to say, oh, Tom from Walks on Wall Street said go buy these stocks. It's not what I'm saying. But Palo Alto Networks, I think they trade under the ticker symbol PNAW or P or vice versa, and Zscaler. And I think they trade under the ticker symbol ZS. Buff 20 says, looks like a layer cake. Yeah, it is kind of interesting, isn't it? Now, I will say this. A lot of these cybersecurity companies and tech companies in general have tend to trade at extremely frothy valuations, especially during COVID when you had this massive, massive push for decentralized workforces, hybrid work, and interest rates were near zero, right? So a lot of these SaaS companies, one of the benefits to them is they could scale really, really quickly, right? Their scale could be massive. So they grow top line revenue very, very fast. But oftentimes when companies are focused on top line growth, they could suffer on bottom line profitability. Now that's fine when interest rates are very, very low. But the moment interest rates start to go up like we've seen, the first stocks to get hammered are companies with very, very few earnings in the present. They may have earnings projections 2 or 3 years down the line, but as interest rates move up, the value of those future earnings in the present day become worth less, right? So I think that's why, as we sort of talk about this stock market decline, the companies who have been really taking it on the chin the most have been these very high beta, very frothy tech companies that have been focusing on growing top line at the expense of their bottom line. So, hey, NYC Cherry Groove is here. Good to see you, Cherry Groove. So Cherry Groove, what do you think? You think the hurricane is gonna slam into Miami, or you think we're gonna dodge it? I think this is one of those Shiba Inu dogs here.
Fucking asshole! Slow the fuck down! What the fuck is your problem? Slow the fuck down! Asshole! Fuck you!
Yikes. All right, let's go to Wall Street, or the Miami Wall Street. But so I know we talked about cybersecurity. I do want to talk about the housing market a little bit. Mike Skate TV says somebody is mad. I mean, to his defense though, the drivers here are nuts. They drive like 90 miles an hour throughout the city. It's like, just slow down, man. We know you're in a BMW, you're a big shot, we get it. But, you know, just drive the speed limit. You're gonna get to your destination. Don't worry about it. You'll be fine. Yeah, Mike C is like, are we in New York City suddenly? Well, we're about to be here on Brickell Avenue, which is the Wall Street of Miami. Hey, Dr. Longus is here. Good to see you. Devin says, hey Tom, I'm 22 years old and quite interested in pursuing some sort of a cybersecurity career. Obviously, I still need to do tons of research. Yeah, so Devin, I would highly, highly suggest a career in cybersecurity 100%, either at a pure play cybersecurity company, or you could work for other companies and just help them build out their cybersecurity infrastructure, right? So this is what I would do. If I was 22 years old again, this is what I'd do. And I think this is one of the best ways to actually learn about cybersecurity in general. So what I would do is I would pick the top 5 cybersecurity companies out there that you're interested in. Assuming they're publicly traded, what I would do is I would go to their investor relations page. Okay, now once you're on their investor relations page, you're gonna see a lot of data being thrown at you. That's fine. This is what you do. Now, let's just take Palo Alto Networks, for example, because that's what we've been talking about tonight on the stream. I think we're safe to cross here. What you'll notice if you go to Palo Alto Networks investor relations page, not only will you see all of their quarterly earnings conference calls, which I would highly suggest that you listen to, take notes on it, understand the business, but you'll also see technology days of big investment banks, right? So you'll see, Q1 or Q2 Goldman Sachs or Barclays technology conference, where one of the managing directors of the investment bank will sit down with either the CEO of one of these companies or the chief financial officer or the chief technology officer and sort of talk about the business, right? And I would watch all of these interviews, and nobody really watches them. Nobody goes to the investor relations page of any company because, it's boring. It has a lot of raw numbers and data. But if you watch all of the videos on there, you're going to learn a lot more about cybersecurity, in my view, than you will from any sort of pure play class about it, because you're hearing right from the CEO of the cybersecurity company what their go-to-market strategy is, what their top clients are seeing, right? So if you're very, very in tune with these specific businesses, when you go to interview with these specific businesses, you'll know exactly what their go-to-market strategy is. You'll know exactly which particular products and services they're trying to push or they're trying to sell. And you'll even know the exact pain points and concerns of their customers, right? So if I had to do it all over again, that's what I'd do. I'd go to the investor relations page of all the top cybersecurity companies that are publicly traded, and I would listen to all of the earnings calls, number one. But number two, I would listen to a lot of the technology and investor relations days at like Goldman Sachs, Barclays, and the like. So I believe this is the Four Seasons Hotel and Tower, as well as the HSBC building. Hey, Austin City Limits, good to see you, my friend. Jules, welcome. The LT Prods is Tom. The East Coast of Florida has lots of people from New York and Boston areas, so no surprise how they drive similarly. That's a good point. They do call Miami the sixth borough of New York, they call it. So you do have a point. So this is 1441 Brickell Avenue, Four Seasons Hotel and Tower. Hey, Estella's here. Says, hey, Tom and chat. Nice to see you on this Saturday night. Just read about the hurricane. Stay safe. Thank you, Estelle. Much appreciated. Yeah, I mean, I think it's gonna miss us, which is good. I mean, fingers crossed. But I believe Pensacola, Florida, Tampa, Florida will be hitting the main brunt of the hurricane. Wow, NYC Cherry Grooves says, Tom, a major disaster occurred in Havana, Cuba. The iconic Saratoga Hotel blew up. Holy crap. A gas leak caused many deaths and destruction of the amazing hotel. That's terrible, man. I didn't know that. Did that just happen? Jeez, that is horrible. You know, I don't think we've ever been down this far. So this is the Four Seasons Hotel, 1435 Brickell Avenue. Hey, Alex Lopez is here. What's up, kid? Cheers from West Miami. Hey, Alex, good to see you, man. Looks like the hurricane is going to miss us, so that's a good point. We're outside of the Four Seasons Hotel here. Just having a little bit of a conversation about cybersecurity in the housing market tonight. Travel Nice, this is Tom. Is this your first hurricane? It's my first Florida hurricane or tropical hurricane. You know, on Long Island, you know, I like Hurricane Sandy, all that stuff, but I've never experienced an actual tropical hurricane in Miami, so this will be my first one. Hey, Michelle says, hey, Tom, I'm a fairly new subscriber and have been really enjoying your streams. Thank you, Michelle. Appreciate it. Hopefully you're having a good weekend. Thanks for joining tonight as we walk down the Miami Wall Street. A lot of Latin American banks. This is an interesting sculpture here. Hey, Captain Coomer says, where's the Chase building? Jamie Dimon sits there sometimes. I'm actually not too sure. I do know that 3 blocks north of here is where the new Citadel Securities building is going to be. Now, they haven't broke ground on it, so temporarily, a lot of the employees of Citadel Securities are now working in the 200 Southeast Financial Center, actually in the building I work out of sometimes. You know, these palm trees are by far my favorite, these ones. These things look insane. Ooh, NG says, Tom, my first year in Florida was 2017, and I experienced Hurricane Irma. Oh my God. Well, hopefully there wasn't too much damage from Irma. Captain Coomer says it's 1450 Brickell. So we're close. Ren 1018 says, Tom, what a crazy last week in the markets. Yeah, very, very crazy. Now, my biggest concern, and we sort of covered this and we sort of talked about this, but my biggest concern is the liquidity crisis. And the bond markets are really, really screaming here for a potential liquidity crisis. Now, the moves in the debt market have been really, really unprecedented. Now, if you were watching the markets closely on Friday, maybe we'll turn back and then I want to show you guys Citadel. If you were watching the, oh, Captain Coomer, this must be it, JP Morgan Chase. I'm assuming because it has the big Chase logo on the top. I know I should never assume, but man, these are by far my favorite palm trees. These things are sick. But one of the things that's concerning me is the action in the debt market. So if you look at that 10-year US Treasury yield, we made a massive move. So intraday, I think that 10-year US Treasury got all the way up to 3.7%. I think it's since settled at like 3.5. Because there was actually some material buying going into the close. Now, I have a thesis, potentially why I think the 10-year yield and the yield curve in general sort of came down a bit going into power hour starting at 3 o'clock on Friday. I think it was probably the Fed getting in here and buying some bonds. Because, I mean, the bonds have just been getting absolutely crushed. And we sort of talked about the overall or overarching thesis about why the dollar, I think everything stems from the dollar, right? So the Dixie, I think, closed at 113, which is just unbelievably, unprecedentedly strong. And many people would be like, well, how is it possible that the dollar is actually getting materially stronger after we just printed 2 trillion, 3 trillion, however many trillion you want to call it, during the pandemic? Well, it's because the Fed is raising rates, right? And as the Fed raises rates, it sends a message to global investors that, okay, US debt is becoming increasingly more attractive, right? So you're sort of seeing this liquidity suck out of emerging markets into the United States. Now, the problem is, as the dollar goes up, think about all the outstanding dollar-denominated debt that emerging market countries have and emerging market companies have. And so if the dollar is ripping and their native emerging market currency is falling off the face of the earth, well, it's going to be increasingly harder to service their dollar-denominated debt. And this has been putting massive, massive pressure on emerging market currencies, sort of forcing a perpetuated cycle of central banks globally raising interest rates to try to save their own currencies. Now, we talked about, I think it was either a Bloomberg article or a Wall Street Journal article, maybe about 3 or 4 weeks ago, that sort of outlined what a lot of these countries are doing in relation to dipping into their strategic reserves of US dollars to try to save the valuations of their own currencies. You know, I think it was Thursday where the Japanese actually had to step in to save the yuan, or excuse me, to save the yen. Man, it's crazy windy. And the Bank of Japan is still doing QE when pretty much every other central bank besides Turkey is raising rates. So in order to save the value of their own currency, they're sort of stepping in here and trying to act as the plunge protection team in the currency markets. And many of the very, very small emerging markets have actually almost depleted their entire foreign currency reserves as it is. So maybe this is a play for the International Monetary Fund to potentially come in here and start saving the day. But who knows? It's going to be very... This is sort of uncharted waters here, which is concerning me. But... And obviously, if you look at, you know, any of the emerging market ETFs like VWO or EEM, those are all falling off a cliff, getting really, really hammered. Hey, Willix is just checking in. Is a hurricane supposed to hit Miami and when? Yeah, so supposedly it's supposed to hit Tuesday or Wednesday. But as of now, it's actually looking like it may not hit at all. It may hit Tampa, Florida, and even maybe Pensacola, Florida. So it may actually miss us. So we'll see. The LT Prod. Yeah, so the LT Prod, have you ever heard of the... Now, Brent Johnson is a very notable fund manager. And I apologize for the wind noise. Maybe we'll sort of head back to the other side. Maybe it's less windy. But Brent Johnson is a very, very notable fund manager. He actually used to run a gold fund back in the day. But he coined this thesis called the dollar milkshake theory. And it's been on my radar for quite some time. But it's actually playing out. It's actually sort of materializing right now. So I believe on Monday, assuming the hurricane is not here, I want to do an entire stream dedicated to the quote-unquote dollar milkshake theory by Brent Johnson. But in the meantime, if you guys want to do your homework about it, but it's essentially that, right? That we could potentially be entering a world of a perpetuating strong dollar, which is going to crush emerging markets. But that is sort of the thesis, the dollar milkshake theory. Paul Tricky says, Tom, did you go to Costco? I didn't get a chance to go today. I went to Walmart though. I got some stuff. And the reason why I didn't go to Costco today, I was gonna rent a car to go, but all of the weather models that I've been looking at show this hurricane completely missing Miami. So I'm like, all right, I'm not gonna go too overboard. I'm just gonna get the basic necessities, and then, you know, I think I'll be all right. Hey, Austin City Limits is going to hit northern Florida as a Category 2. Hopefully it loses its strength. Yeah, I feel like these things are very hard to forecast, especially a week out. So I think I'm probably just going to check in maybe once a day and, you know, look, whatever happens, happens. I have water for about a week. Just as long as it's not a Category 4 or 5, I think Southern Florida will probably pull through without an issue. Hey, Penelope is here. Good to see you, Penelope. Hope you're having a good weekend so far. Hey, D, what's going on? Western Mass Dave is like, Tom, sorry you had to deal with Walmart. It actually wasn't too bad. You know, usually when the hurricanes start, this is Santander, by the way. They're corporate. But usually once hurricanes are forecasted, everybody charges into Publix and freaks out. So, hey, Blue Cruise, is Tom. The Indiana University Ludley School of Informatics and Computing offers technology-focused cybersecurity degree, Masters of Science in Secure Computing. Yeah, and I think that's going to be very high in demand. You know, the demand is actually so high for cybersecurity professionals. You could actually take like an 8-week boot camp and land pretty sizably lucrative careers with just an 8-week cybersecurity boot camp. So yeah, I think if you're looking for a stable career that's going to grow, I would look into cybersecurity. If you really want to make the big money, I would look in on the engineering side and on the sales side of the house. Hey, Nestor is here. Says, hey, Tom, do you see the SPY hitting 320 in the next 2 weeks? I believe we are in the denial stage of the psychology process. What are your thoughts? Yeah, so I really don't know. I mean, I'll give you my thoughts on more of a longer term time frame. I think the returns throughout 2022 are going to be quite muted, right? I think looking at the bigger picture and sort of saying don't fight the Fed, I think the bull case for a Fed pivot is totally out the window. If you've watched the FOMC meeting speech by Fed Chair Jerome Powell, everything that came out of his mouth was extremely, extremely hawkish, essentially saying that they are not going to stop and they are going to be relentless in raising interest rates and continuing quantitative tightening until they have concrete data that inflation is killed. So we could be living in this high interest rate environment maybe into 2025. So in my view, I mean, as a trader, you know, if you want to try to, you know, trade intraday off some of this volatility, which I think actually now, usually, I mean, you guys know sort of my stance. I don't do day trading. It's not my forte. I think it's rather a waste of time. But when you're in a bear market, you know, bear markets can have these very, very fierce rallies that can quite literally rip your face off. And if you're a volatility trader, you know, I think if you have the VIX right around 30 to 35, you can make some pretty decent money off of this volatility, right? So traders need volatility, especially if you're running like, you know, a quant strategy or something like that. I think you could do very well here if you are sort of, I'd put it like this. I think if there was ever a time to do some short-term trading, it's when the VIX is elevated like this, right? Because when the VIX is elevated, you're probably gonna have crazy swings. I mean, look what just happened. we rallied, and the S&P was only off about maybe 7% from all-time record highs, and now 2 weeks later, I think the S&P is down 9% in 2 weeks. So I think that it creates some opportunities there. But to address your question more directly, I'm just not fighting the Fed here. It's going to continue to tighten. I see liquidity drying up, yields are going up, and that yield curve continues to be extremely, extremely inverted. Look at the 10 and the 2s. It's inversions all over the curve. And I don't think, I mean, from a valuation standpoint, I think the S&P 500 is trading at roughly 15 times forward earnings. Now, that's assuming the earnings estimates aren't revised down any further, right? I mean, that's sort of the fear with just basing your buys off of a forward projection, because future earnings aren't guaranteed, right? You could have business fall off a cliff. So forward projections are based off of estimates, and estimates can come down. I'm just not fighting the Fed. And, you know, maybe once the Fed starts to ease up here a little bit, I think I'll initiate some longer term positions. But the other thing I'd like to say is this is going to create like unbelievable, unprecedented opportunities. Like this downturn right now that we are in the markets, with the NASDAQ off 25%, S&P down 20%, the Dow Jones Industrial Average actually cracked below its June low. This is creating ungodly opportunities, right? And the market will turn up. When, I don't know. But I think it's always important to be prepared, because at the end of the day, corporate profits in America, generally speaking, tend to go up over the long term. Could there be hiccups along the way? Could corporate earnings and corporate profits decline next year? Sure. But over the long term, so long as we keep intact, I can't see because this guy's windows are so tinted. I would say so long as we keep the ideology in the United States intact that if you are an entrepreneur, doesn't matter where you're from, doesn't matter what country you're from, doesn't matter what language you speak, if you want to come here, you have an equal opportunity to build a business and you could get rich. And that has been the backbone of America for 100 years. And that's why pretty much all of the major technological innovations have come from the United States. People want to come here, entrepreneurs want to come to the United States to build their businesses. And when you build a business, you need to raise money. When you raise money, it may go public on the exchange. We have the very, very good opportunities to buy these publicly traded companies and participate in a share of their profits, right? And I think that's going to continue. I don't think, it's going to be Armageddon and the world's going to end. I mean, yeah, we may go through some downturns, but at the end of the day, I think the innovation's in the United States. And I think it's like that to stay. Hey, San Miguel is here. Good to see you. San Miguel, welcome, my friend. Hopefully you're well. Cindy Foley says nice buildings in Miami. Yeah, Cindy, one of the things I like about Miami specifically is everything is very clean. They keep it very, very clean here, which I like. Roland Clark is here, welcome. Ninja is here, says, hey bro, Ninja here, welcome. Good to see you, Ninja. Mike C says, no one is crediting Michael Burry for calling the stock market. He got out of all but one stock in June. Yeah, I think to your point, Mike C, and for those of you who don't know, to Mike C's point, Michael Burry is very, very famous investor on Wall Street. He is most famous for calling the housing or the financial crisis due to the housing crisis, right? Let's check out the Paramount Tower. We were here yesterday, but it's a cool building. And he shorted essentially had a huge short position during the great financial crisis, made a bunch of money for his investors, but he is sort of what I like to call a perma bear. Now, he's way smarter than I'll ever be. He's a better investor than I'll ever be, but the one thing I'd like to say is it's sort of like a Peter Schiff, right? Peter Schiff is an incredibly smart guy, incredibly successful guy, but if you just base your investing thesis off of Peter Schiff, you'll barely have enough courage to get up in the morning, right? You're going to be so petrified that you're just not even going to want to do anything. You're going to think the sky is falling. The way I like to equate investors like Peter Schiff is what he says is 100% correct, but you sort of have to invest in the market circumstances that you're presented. And Peter Schiff is like, yeah, the Federal Reserve is printing a bunch of money, they're having artificially low interest rates, at one point this thing's gonna crack, get out of US stocks. He's been telling you to get out of US stocks since 2012. The S&P has doubled since then. Now, again, what Peter Schiff is saying is absolutely right. The reason why equity valuations are so pumped, or were, is because of easy monetary policy, right? But you still gotta sort of trade for the environment you're in. And if you look at a lot of Peter Schiff's funds, like in Euro Pacific Capital, they've had not 1 year of positive returns over the last 20 years. Or maybe that's a little bit too stretched. I think over the last 12 years, they've been negative returns. So I think you just gotta, the trend is your friend. Don't fight the Fed. And markets move in cycles. I will say the Federal Reserve definitely has exacerbated these massive boom-bust cycles. You guys notice that literally like clockwork, once the printer starts, valuations take off like gangbusters. But once you start to pull the punch bowl away, as I like to say, and start raising interest rates, start tightening monetary policy, everything just starts to crumble before our eyes. So I think this Keynesian economics with sort of manipulating markets, pumping liquidity, has created these really, really exacerbated boom-bust cycles. I'll give you guys another. You can see the Bank of America tower in the distance. San Miguel says, whose quote is "the trend is your friend"? I don't know. I'm not sure exactly, but if I had to pick somebody, maybe like a Paul Tudor Jones or a Stanley Druckenmiller. But if you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days a week between New York City and Miami. Dr. Longus is so true about the Fed and the boom and bust cycles. Yeah, I mean, Dr. Longus, I think if you look at the expansion of the balance sheet, so the Fed's balance sheet is made up of mainly mortgage-backed securities and US Treasuries, and as that balance sheet grows, there's about a 97% correlation with equities to the growth of the balance sheet. So if you just had one investment thesis to say, okay, when the Fed starts to tighten their balance sheet and let those assets roll off and start to sell mortgage-backed securities and US Treasuries, okay, I will go short. And when the Fed starts to cut interest rates and expand the balance sheet, I'll go long. That's essentially worked every single time since 2008. So the panorama tower right here. This thing is insane. This thing is really, really tall. Beautiful building. Hey, Chris Beeman is here. Good to see you, Chris. Chris is joining us from the one and only Arizona. So Mike Teese is looking to buy real estate, ? So let's actually talk about real estate for a minute. And I know I apologize, everybody, that we've been talking about a lot of stuff tonight, and usually Saturdays on the streams we usually don't talk about. That's a really nice Tesla. We usually don't talk about the financial markets. But let's talk about housing. So let's put something in perspective for a minute. So I want to read you guys a couple of statistics that I jotted down here that I think are good to put things in perspective. So there were about 1.3 million homes for sale in August. So let's compare that to some of the years leading up to the housing bust, right? 2008. So keep that number in your head. As of August, there's about 1.3 million homes for sale in the United States. Let's go back to 2006. So August, we're comparing August of 2022 to August of 2006. There was about 3.8 million homes for sale in August of 2006. Oh wow, look at how low that plane is flying. That's insane. Let's see if it comes out on this side. You know, I think one day I may rent an apartment here if it's not too expensive, if things start to come down, which I think prices will come down, because I could sit on the balcony and watch the planes take off all day. So in August of 2006, that was when the housing market was really, really starting to heat up. And we had almost triple the supply. And now we are in a cycle where interest rates have essentially gone up 100% as it relates to a 30-year fixed rate mortgage, okay? So this time last year, you could probably lock in a 30-year fixed rate mortgage, generally, let's just say 3% for argument's sake, okay? As of yesterday, Friday, the average going rate on a 30-year fixed rate mortgage was 6.25%, so 6.25%. That essentially cuts people's purchasing power in half. So, knowing that we've essentially cut purchasing power in half, why aren't real estate prices collapsing like they should? Now, I will say this. I think real estate prices are going to come down. But I don't think it's going to be like a 2008 style moment where things just totally go bust, right? Back in the day, and we've talked about this for a long, long time. Leading up to 2008, there was a lot of bankers that were doing a lot of nefarious activity. They were, I would say, unethically coercing people into ARMs, which are adjustable rate mortgages that have balloon payments. The underwriting standards leading up to the 2008 financial crisis were absolutely egregious. You had people that were getting mortgages with no income verification, very, very poor and low credit scores. Very, very poor and low credit scores. Which essentially, in layman's terms, if you lend a bunch of money to people to buy homes when they don't have the money to do it, and then the vast majority of those people don't have fixed rates and they have adjustable rates, well, it's a recipe for absolute disaster. So you had a wave of defaults all at the same time, a wave of foreclosures, and the market crashed. Now, the reason why it crashed is because there was a flood of supply coming onto the market. As of right now, we're not really seeing a massive tidal wave of supply coming onto the market, right? There's about 1.3 million homes for sale in the United States right now. And in the same month in 2006, there was 3.8 million, and now there's 1.3. So the supply is not where it should be for material price declines. Now, according to our friends over at the Federal Reserve, let me just cross the street here. You know, maybe I'll cross at the other one because I don't think there's a light. So I think I just lost my train of thought. But according to the Federal Reserve, there should be about 5 months of supply on the market to use Fed Chair Jerome Powell's words, for housing prices to start to grow at normal trajectories, right? Because what we saw in COVID, or C-19, as I have to say so we don't get canceled, in select markets, you saw housing prices go up by 20-30% per year, which is just totally not sustainable. So the bear thesis here is that, okay, the economy is turning down, interest rates are going up, a 30-year fixed rate mortgage is yielding it's going to cost you about 6.25%, probably 6.5% by Monday as the rate of rates are moving. So real estate's going to crash. That's the bear thesis. Well, I think you need to add one more thing to the bear thesis. The real estate market is going to crash if there needs to be an if. And that if is if people decide to sell their homes and supply comes onto the market. Because if you really think about it, over the last 10 years, I would probably argue that the vast majority of people, let me try not to get hit by this car. I would argue that over the last 10 years, the vast majority of people probably have an interest rate below 5%. Is that fair to say? If that's not fair to say, let me know. In my case, I have a 3% rate on my property. So even if, let's say if you were thinking about moving, you want to sell your house and you want to move somewhere else, you're just going to have to go back into a market where you're going to be paying close to 7% on a 30-year fixed when you may have a 3% rate already. So that could deter people from selling. And I think the one thing that could potentially get things cooking here to have a ton of supply go onto the market is if tons of people start losing their jobs and they can no longer afford their mortgage payments, and then supply comes onto the market that way. Now, I know what you guys are saying. Well, Tom, isn't that the same thing that happened in 2008? Duh, everybody lost their jobs. Right, but that was sort of the cart before the horse. Right, why did people lose their jobs in 08? Right, it was because there was a massive contagion effect because Wall Street essentially crashed the economy by writing poor loans. And then on the poor subprime loans they wrote, they created toxic derivative assets to sell to their clients. Oh, by the way, that they were betting against. But we'll go into that on another stream. So again, the people who are, generally speaking, now I know there's some nuances, but generally speaking, the people who were purchasing homes over the last 6 to 10 years, their credit quality and the default risk, well, let me say this, their credit quality is probably way superior than they were in 2006 leading up to the financial crisis because underwriting standards got better. And the default risk is probably significantly lower. Now, I'm not saying this can't happen again and there couldn't be another 2008 financial crisis. That's not what I'm saying, but I think the probability of that happening is rather low. But I do think that real estate prices will come down. But then I think the next topic of conversation that we need to talk about is the difference between national and regional in terms of prices, which we'll talk about that in a minute. Hey, Kevin Mendez. Hey, Kevin, good to see you. Kevin says, good evening, Tom. Thank you, sir. You know, we're outside of one of my favorite buildings here in Brickell, the First Presbyterian Church. It's such an interesting contrast, this building, amongst all of these very futuristic, super tall looking modern buildings. Dusty Cole says housing prices are falling in Northern Virginia, but not sure at what scale. Yeah, I think that if you were in the, let's say if you're in the market, let's say if you don't have a home right now and you want to buy your first property, your first investment property, I would chill out a little bit and I would wait till late Q1 into Q2 of next year. Because here's what's going to happen. And I think, and again, when I say this is going to happen, this is my opinion. My opinion means absolutely nothing. Everybody has an opinion, and opinions mean really nothing. That's a beautiful husky. 10 out of 10 on the husky. You guys see the husky that walked by? 10 out of 10. That thing was beautiful. So again, my opinion really doesn't mean anything, right? I could totally be wrong on everything I'm saying. But here's what I think is going to happen. I think in select markets, and I'm going to call out Miami. I try to not be biased at all in my analysis, even though I am a property owner here in Miami. But I think it's disingenuous if I give a biased opinion. I think select markets that saw massive turbocharged growth due to the pandemic, I think those are the markets that are going to see the price declines. But if you look nationally, this is why I think there needs to be a very clear distinction between national and regional. Because if you look at the data, there has been only one time since the Great Depression that US home prices have fallen significantly. And that was in 2008. However, if you look at a regional basis, there's actually been many times when housing prices have fallen. You know, take a look back and think all the way back to, you know, the 1980s with the huge boom-bust drilling cycles in Texas and in Oklahoma. Regionally, those prices came down like 28%. So what I think is COVID created this situation where you had a mass exodus from states like New York, California, a lot of the deep blue states, and I'm not trying to be political here, I'm just giving you the facts, that had very, very harsh COVID restrictions, and people didn't like that. So they're like, I'm leaving to Florida, I'm leaving to Austin, Texas, I'm out of here, right? And another thing that exacerbated that was due to remote work. You know, why would I want to work remotely, or why would I want to work in New York City when it's 20 degrees and it's freezing and I'm miserable, when I could work remotely in Miami, Florida year round, right? So you had a massive exodus of people moving down here, pushing up the prices to unsustainable levels. Oh, check out that nice plane there. So here's what I think. I'll sort of cut to the chase. I know you guys hate when I ramble. I have a tendency to do that. What I think is you're gonna see markets like Tampa, Florida, Miami, Florida, Austin, Texas, Houston, Denver, parts of Boise, Idaho, have a correction, and possibly a quite maybe sizable one. I would say maybe 15%. But nationally, I don't think you're really going to see a big hit to national home prices. Regionally, I think that the markets that saw massive freaking turbocharged growth, they're going to come down a bit and normalize, okay? You know, I was looking on Zillow, and I think I told you guys this. There's single family homes in Miami that are 3-bedroom, 2-bathroom homes, and they're listing them for $600 grand. Like, that's not even a real price, okay? That's just a wishful thinking price. It's obviously not worth that. That's ridiculous. Those are gonna come back down to 400, maybe 410, 415. Because I think a lot of people are saying, wow, you know, I could sell my home to a snowbird from New York, and they're gonna pay 600 grand for a 3-bedroom, 2-bathroom house. Yeah, maybe during COVID, but not anymore. A lot of that nonsense is gonna stop. Those were really never real prices anyway, so I think those are gonna come back to reality. Yeah. But so that's sort of my thesis, but what do you guys think? Do you think we're gonna see a big
correction across the board? Or do you think it's going to be more isolated to the markets that had explosive growth due to COVID? What are your thoughts there? Hey, Rachel says, yes, definitely in Hialeah, Florida. Tortellini's like RIP to whoever paid that. Deborah says they didn't leave New York City because they didn't like the COVID restrictions. They left because they could work anywhere and out of fear of living in a dense city. Well, I was one of the people who left New York, and one of my reasons was because of the COVID restrictions. But also because of the remote work, and also because I just love Southern Florida. And a lot of my clients, I tend to have a very, very big client base in the healthcare field, specifically home healthcare. And during COVID, there was huge amounts of M&A activity. So I was helping my clients that just bought massive home healthcare agencies. I helped them with their technology. But it's a good point, Deborah, it's a good point. Big Picks is crickets, but no correction. Charlene says, I heard the market going to drop, the best time to buy a house then. Yeah, and at the end of the day, like I'll say, I don't really think anybody knows when the exact time when the market's gonna drop, or is it gonna crash, or is it gonna be correction. Everybody's speculating, right? Nobody knows. You could have a PhD in quantum physics, you could be the smartest person ever. The market will do what it wants, right? There's been people making YouTube videos since 2012 saying the housing market's gonna crash, right? Every year. I was watching YouTube videos back in 2015, people saying, sell your homes, sell all your stocks, it's gonna be Armageddon. So there's always gonna be those people out there. Are we gonna have crashes and downturns? Yeah, for sure. But I think if somebody says they know for sure when that's gonna happen, they're blowing smoke. Including me. If I'll never come on the stream and say, oh, I know this is gonna be 100% crash or 100% correction. That's not how it works. Nobody knows 100%. You could maybe have an opinion that you formulated through looking at data, but nobody knows. So this is the City National Bank building. Beautiful building, by the way. I love the very luminous blue. Dr. Longus says, I noticed in North Carolina it's taking longer to sell a house now. Yeah, well, I guess that's how it starts, right? So to Dr. Longus's point, he's saying, look, it's taking longer to sell a house, or markets are sitting longer. Metro mover right there. Or houses are sitting longer on the market. I think that's why you've been seeing equities decline first, and then housing will sort of follow. And we've talked about why, obviously liquidity, but it's not like you could log on to Charles Schwab and market sell, your house, right? You could go on to Charles Schwab and liquidate, $20 million worth of stock in a click. The housing market is rather illiquid comparison to equities. So the house is gonna sit on the market maybe for 2 weeks. You have to show it, you have to have open houses. People make offers, deals fall through. So after 30 days, maybe the seller's like, all right, nobody's really biting on this. I'm not really getting many offers. All right, I'll drop the price by 5%, right? And then that's how it starts. So it's not as liquid of a market as the stock market, where traders could price in higher interest rates in a matter of a couple months. That's a good point. Ren 10 says, Tom, I am actually surprised by how hot New York City came back despite all its major flaws. And some are major. Yeah, I mean, Ren 10, my thesis, I've never been in the camp with all those people during COVID that says New York City is never gonna come back. New York City is a very, very unique city. And I know it's never good to think in definitives, but New York City will always come back from everything, regardless of its political climate, because the city is just such a cool place, right? And unfortunately, I think politicians understand that, And I think that's why the political climate will never change there, because politicians know that the city is unmatched. New York City is the greatest city on earth. People want to be there just because it's so freaking cool. The history is amazing there. The energy is amazing. And the politicians know that, so I don't really think the political climate will ever change, just because it really doesn't have to, because people will always be there because it's so great. So I never really bought the narrative that New York City's gonna be gone. I know there was a lot of people that were calling for that, but I don't buy that at all. Hey, Silva says, hey Tom, I miss Miami. I was there 2 days ago. Hey, very nice. So which part of Miami were you in? Were you in sort of downtown Brickell? Dr. Longest says, yes, so true about New York City. Julia M says, hey Tom, glad to be here tonight. You are the calm before the storm. Thank you so much, Julia, I appreciate it. Hey, Marcy is here. Good to see you, Marcy. Silva Inc. says, if you're ever in Miami, go by the beach in South Beach and see the sunrise. It's a view I'll never forget. You know, that is true. Also, I would recommend Sunny Isles Beach, which is a little bit further north. But some of the sunrise and sunsets in Sunny Isles Beach is unbelievable. It's amazing. Hey, Victor's here. What's up, Victor? Sabrina Fair, what's up? Billy says, Tom, got my first listing appointment in over a month. Market is definitely cooling down. Yes, so Billy, what are you seeing from some of your clients? Are they complaining about the interest rates, obviously? Because, I mean, think about the person who could technically, and I'm using air quotes here, afford a $600,000 piece of property at a 3% interest rate. We've had 100% move in rates. So for the same person that has technically the same purchasing power, they could roughly probably afford a $350,000 to $400,000 home just due to the rate adjustment in and of itself. So I think this market is going to come down. I don't think it's going to crash, but I think it's going to move back to reality and real prices. Because some of these prices we've been seeing is just utter nonsense, like crazy. You're starting to see San Francisco roll over a little bit. You're starting to see Silicon Valley, a lot of those areas roll over. So we are now back in the Brickell / Mary Brickell Village area. These two buildings are my favorite here in Miami. I think this is right next to the SLS Lux building. Gus says, Tom, you must have a nice tan enjoying Miami. Thank you, Gus. Appreciate it. Hey, Nora NJ15 says, hey Tom, Action Kid is live right now streaming in Queens, just so you know. Yeah, I told Action Kid I'd hold down the fort here in Miami for him. Joe says, I'm here from New York too. What's up, Joe? Good to see you. Ah, Estelle, yeah, Clearwater. Estelle says, Tom Cruise has a beautiful place in Clearwater, Florida. Have you ever seen it? So Clearwater is on the West Coast, I believe. So Miami is on the East Coast. Clearwater's on the West. And unfortunately, I think they're probably going to get more of the hurricane than we are. Arum Z says, hey Tom, hope you're well. Good to see you. Ooh, we've already been streaming for an hour and a half. I actually have to head over the bridge. I'll take you guys over the bridge with me. Totally lost track of time. I thought we were only streaming for like 30 minutes. Billy says many just want to wait and sell now. And people are starting to pad buyer agents with higher commissions. Wow. Very good piece of information there, Billy. Thank you for sharing that with us. I mean, the one thesis that I could think of potentially that will force people to sell property are people who were forced to work remotely during the pandemic. And they thought, all right, I'll move 200, 300 miles away from my actual office because we're probably going to be working remote forever. And now that their company is calling them back to the office, we'll take a shortcut. They have no choice but to sell their property so they can keep their job. I wonder how many people that impacts. Now, I remember there was a couple people on the stream we were talking to that told us they're in that exact situation. They may have bought a piece of property in New Jersey, 200 miles away from New York City, and now their boss is calling them back to the office. Obviously, they can't commute 200 miles every day, so now they have to sell or rent their place and get a new place in the city. So I don't know, maybe it's affecting more people than we originally think. It's possible. Yeah, Marcy is like that. That's gotta suck. True. So this is inside the Brickell City Center, the indoor/outdoor mall type place. Very nice in here, very clean. The LT Prod, that's a good point. Says Tom, there are a good amount of houses that have sat empty for years. I wonder if some of them will have to sell because they can't afford the taxes anymore. Taxes are gonna be a big hit, trust me. My taxes went up like crazy property taxes. And I think this is probably gonna impact people who bought in Texas specifically. Because many people say, okay, Texas is great because they don't have any state income tax. But if you buy a piece of property in Texas, you are gonna get hammered with the property taxes. So make sure you vet that out. Hey, Marcy, this is Tom. I've never ventured over to Brickell. It's been years since I've been in Miami. Well, Marcy, I think if you were ever gonna visit Miami, you should probably do it during the winter time, so you get a little bit of a break of the very cold weather. Yeah, Kevin Mendez properties used to have price wars for it like 2 years ago. Somebody says rent sky high, it should cover the taxes. Well, that's actually one of the reasons why we've been seeing upward pressure on rentals or rental prices, because if somebody's property taxes are going to go up, that in turn means, and if you're a landlord, you got to raise the rents to cover your overhead. Very good point. So guys, just a quick recap, obviously today being Saturday, but if you guys have time, check out the cover story in the Wall Street Journal this weekend. Okay, very important. We've been talking about cybersecurity for quite some time. Watch this emerging trend of zero trust cybersecurity specifically. I think that spending on the government level, well, let's just call it SLED, so public sector education, is going to continue to ramp. I think it's going to become a requirement. And if you think about how Uber got hacked, if you think about how Okta got hacked, one of the reasons why hackers were able to get into or gain access to Okta's internal corporate infrastructure is because some of the third-party contractors that Okta had hired did not have sufficient cybersecurity infrastructure in place. So the hackers actually didn't get in through a vulnerability in Okta. It was actually because a contractor, a third-party contractor, and many of these tech companies hire contractors to do installations and other things. So what I think is going to happen now is businesses are going to provide strict parameters that says we will not do business with you, or we will not hire you as a consultant, we will not hire you as a contractor unless you meet this requirement for zero trust technology, zero trust cybersecurity, and that's only going to increase the spending even more. I think you're going to see state, local governments, federal governments. Ooh, I think that was the first rat we saw in Miami. It may have been a mouse. Did anybody else see that? I think it was a mouse. I think you're going to see schools. What did we talk about 2 weeks ago? The Los Angeles Public School District got hit with a cyber attack. I think you're going to see local governments saying, we will not work with you as a business unless you don't have sufficient cybersecurity infrastructure in place. Only adding to the additional cybersecurity spend. So if you have time, if you got the paper, check it out. Read the article about zero trust, because it's so interesting that they're just now talking about it in the paper, because we've been reviewing this on a weekly basis for about 6 months now on the stream. Zach Truce, the street mouse. The LT Prod says Okta took a huge hit to the stock price. Yeah, I think Okta may be down 80% for the year, maybe 75. Hey, Lotus Blue says, I blame Miami. Last time I traveled was 1 year ago. Some bum stole my phone. Trash city. Well, hopefully you recovered your phone. And hopefully you had some sort of an MDM cybersecurity software on your phone. So God forbid, if you do lose your phone, you can just go back in your portal and remotely wipe all the contents off of your device. So I consult with, well, back in the day, and I still do. I would sell a lot of these endpoint cybersecurity software to home healthcare agencies. So when their home health aides would be out in the field, you know, some home healthcare agencies could have 20,000 home health aides across the 50 states. And if they're using their personal devices or devices in general to clock in and out, to accept patient cases, to write down proprietary medical information, if they administered medication or not, you know, what if that device is lost or stolen in the field? In order to comply with HIPAA rules, ooh, look at that dog. In order to stay compliant with HIPAA, you need to have a way to remote wipe the contents on that device, so you can essentially make the device a paperweight, right? So if a home health aide loses their device on the subway, they could tell their administrator. The admin just goes back into the, VMware portal or whatever cybersecurity solution they're using, like Scale Fusion or CodeProof, and they can just remotely wipe the contents of the device. This is the W Hotel and Residences. And it looks like we're gonna have a massive traffic jam here because the drawbridge is going up. Hey, T Dobbs says, hey, if you see Buffalo Bills bar, it'll be rocking. Where is that? I'm not too sure where that is. Ricardo 305 says, is that a church? Yeah, this is a Presbyterian church right here. Okay, let's hurry up to the drawbridge. Let's see if we see any interesting boats going by. Now, I remember doing the live stream last year in December. December is when Miami attracts all those crazy yachts. Do you guys remember last year? the yacht with the helicopter on the top. That thing was insane. Speaking of insane, this building right here is the Aston Martin Tower, which is almost complete. And this building is nuts. Really, really nuts. I think it may have 2 or 3 swimming pools on the top. It looks like something's coming across here. I think it may be, I think that may be, let's see. What is that? Oh, maybe a cargo ship. Hey Letitia, good to see you. Sweet country living in Michigan is here. Good to see you, my friend. Well, look at how far back the traffic is backed up. So this is Bank of America Tower. Oh, check out this plane taking off.
So please stay clear of the gates and be prepared to load.
All right, they're closing it now. Oh, we got a little boat going by, everybody. Right here. All right, so we'll get to see it close. Hey, Sil, this is Tom. Go across the street. There's a really nice park under the bridge. Yeah, I think we were there last night. I do have to get over the bridge, though, because I got to get the bus. But I'll film it going down for you guys. Hey, my friend Teresa Diaz is here. Good to see you, Teresa. Lotus Blue, we were just there, my friend. You guys are gonna see cars flying over this bridge now. Julia M, Christian Wilson. There's one boat, but this one's a little bit small. Brad's brain, I never thought about it like that. It's a good point. I think it's probably has to do with some of the hurricane standards these buildings have to go through. A lot of concrete. Alright, I think we should be good in a minute. I'll give you guys one more view of the Aston Martin Tower before we go. Estelle says, how often does this happen? We usually get stuck behind the drawbridge maybe once on the stream. Once a stream, I'd say. You can see all the people walking over from that side too. You could see the Metro Mover going across on the other side. Man, those headlights are bright. I can't even see anything. It's like I'm blinded. Lotus Blues says, Tom, do you know if the Aston Martin Penthouse was sold? I think the building may be sold out. It's not even complete, and I think it's already sold out. Hey, Eyeglass Lady, good to see you. Thanks for joining our Saturday night stream. We covered a lot, we talked about a lot. Big Pix is, isn't there a Porsche building? Yeah, so the Porsche Design Tower is in Sunny Isles Beach, Florida, which is just north of here. So I do have some interesting announcements to make. So as the months go on, during the live streams, we may be able to gain access to select, let's just say, very nice apartment units that are for sale. So as we do our topics on the housing market, I think it would be appropriate to maybe do a tour of a specific property, be it a condominium down here, or maybe a duplex or a triplex, where we can analyze those deals live in real time on the stream. So I think within the next 2 or 3 months, when we walk around Miami or when we walk around New York City, we will be doing apartment, man, a lot of traffic here, apartment tours, and even some multifamily tours for anybody who's interested in real estate investment and things like that. I think it would be a good mix for the live stream. So look out for that. Look out for that. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams 5 days a week between New York City and Miami, and we go live at 8:30 p.m. Eastern time. Deborah says, like the cybersecurity talk and other stream like that, please. So one of the things, Deborah, that I want to do in the next newsletter, or in one of the newsletters that I'm going to put out, I'm actually going to give a little bit of a course, like a free course on network infrastructure in general and cybersecurity in general, because I think it's just such an important topic. And a lot of people actually email me and they're like, hey, I'm interested in cybersecurity sales. I'm interested in software sales. So I think if I could break it down very seamless to say, you know, what is a traditional firewall? What is a VPN? What is a public cloud? What is zero trust? I think it's gonna help a lot of people. So I think it'd be a good conversation as well. So look out for that. So this is the Jw Marriott. Now, I think many of you on the streams have told me this hotel is actually a little bit outdated. I've never stayed in it, but I guess I'll have to take you guys' word for it. Supposedly, this hotel is outdated according to you guys. And this is the Aston Martin building. Hey, I love strawberries. Thank you so much for joining. Appreciate it. Marcy says, love the idea of apartment and real estate tours. Yeah, I think it would be good to do it in a unique way too, right? So as we're live streaming, let's say if I'm streaming in New York and I see an interesting multifamily deal, maybe we could head out to Queens, head out to Long Island, do a live stream in the property, and actually do the financial analysis on that property, right? What would the rents be? Is the property going to cash flow? And we can maybe do the same thing for traditional apartments too. You know, explain if the building allows for short-term rentals. We'll discuss the markets in general. I think it'd be interesting to sort of integrate that into the streams if the viewers seem to like it. Hey, Blue Crew, thank you so much for joining tonight. And please have a phenomenal rest of your weekend. Hey, Sheriff Brothers, sir, what is the rent amount for a 1 bedroom a month in Miami? Well, it's gonna vary a lot, because if you get a 1 bedroom in a very, very luxurious apartment complex where you have a pool, you have a gym, you know, rents could go all the way up to, you know, $3,500 for a 1 bedroom, depending on the different amenities. But if you're in a very conservative neighborhood of Miami, maybe a suburb outside the city, you could probably find a 1 bedroom apartment maybe for $1,200 to $1,500. It's really, really going to depend on the location. So this is the Whole Foods here. Mike C, I'll make you a deal, dude. Deal. Myra says, thank you for the tour. You made my Saturday better. Well, thank you. I appreciate it. Hey, Dan Zhang says, hey, Tom, I just got my certification as a bartender today, although I will never be a bartender, but it's always fun to learn a new skill. Dude, that's actually a very, very low-key, underrated skill. I think that's fantastic, dude. That's awesome. You know, I'm actually interested in that as well. How much does it cost? Let's say that. How much does it cost, and how long is the course to become a certified bartender? Because I'm actually curious. Hey, Lotus Blue says, please do a tour of Overtown next. Mixology certification. I'd like to learn that too. Marcy, I actually do have to go into the Whole Foods, not gonna lie. Greg Peters is here, says, I also love the Miami Vice. Good to see you, Greg. Two-bedroom, 1900, not bad. This is always the longest light here. I always say Miami traffic lights is like living on Long Island all over again. 20-minute, 30-minute traffic lights. Mike sees Tom would be an awesome bartender with all the people skills. Way overqualified, but awesome. I think I could do a pretty good job. I think I'd be a little bit self-conscious at first because I could screw up somebody's drink and then they're a little bit pissed off. But I think I may be able to get the hang of it. You know, being a bartender is no easy task. I used to watch these YouTube videos of these master bartenders. So if you guys are ever bored, check out these YouTube videos of like the top bartenders. And there's actually national competitions and worldwide bartending competitions. And these people are insane with their skill. Dan Zhang says, I signed up to go bartending school called Bartending Academy on Groupon. It's $50 a person, but you get a certification by passing the exam, which is memorizing the ingredients for some drinks. Copy that. Textman81 says, does pushing those little things really do anything? Honestly, probably not. But for some reason, I do it anyway. Here, I'll show you guys the So one of the things they're doing here in downtown Miami, which is actually going to be really cool, you see all these sidewalks here? Obviously, probably shouldn't have said that. You see all these sidewalks we're walking on? No, but seriously, what they're going to do is they're going to get rid of the sidewalks and make the street ground level with the sidewalk, the walkway. Now, it may sound like a weird concept, but just wait until you see it. They already finished about 2 blocks over here. And I think you guys are gonna be like, wow, that looks a lot better than this. And it does. I was skeptical at first, but supposedly it helps with the drainage and the flooding. I don't really know how, I'm not an engineer, but I'll show you guys. I have to cross here anyway to get the bus. Joe says, Tom, years ago to be a bartender, it cost about $1,000, and it took about a 5-day course. DJ Blackjack says, hey, Walks in Wall Street, thank you for your videos. Would love to see you stream south of 5th, South Beach, and Wynwood. You know what? I really wanted to, well, first of all, thank you for your nice comment. But I really do want to stream from Wynwood. The problem is, for whatever reason, the cell service there is not existent. Now, Wynwood is actually my personal favorite location in all of Miami. It's fantastic. It reminds me of living in Brooklyn all over again. So many interesting young creatives live in Wynwood, but there's just, I can't even get any cell service. I think I would have to change my provider, so we'll see. Maybe I'll have to switch to like T-Mobile or something. Right now I have Verizon, so we'll see. Miss Loving Myself says, Tom, Bayside is beautiful for viewing. Agreed. Bayside is fantastic. So here we are. These are the new and improved sidewalks here. I guess you can consider it in Miami. So it's street level with everything. You could tell it's brand new. So I don't think this is quite open yet, but you could walk it. But everything is totally level with the street. And I think this has to do with the new drainage system. So the water goes down here and it's actually pumped out. So hopefully this will solve some of the flooding issues here. But I think it looks a little bit better. It looks more modern. You see, if you look all the way down there, everything is sort of roped off. This building, I think, is going to be demolished. It's going to be some sort of a super tall, something like that. But I think this design is a little bit better, actually. Looks more modern. But again, I think the #1 reason why they did this is due to the flooding, I think. But I think it looks better. It looks more modern. Somebody says, could you stream Boca Raton? I've actually never been to Boca Raton, honestly. There's actually a lot of New Yorkers there from what I hear. Western Mass Dave says, I have yet to see garbage on the streets of Miami. Yeah, I mean, that was one of the main takeaways. So I think I told you guys already. The first time I ever stepped foot in Miami was, I think maybe 2015. And I was here on a business trip. And it was during one of the most brutal snowstorms we've ever had in New York. And when I got off the plane, I was literally almost like starstruck at how gorgeous everything was. It almost like wasn't even real to me. And from that day, I was like, I gotta live here one day. It was just that picture perfect. I don't even know how to explain it. It was clean. I'd never seen water that clear. I was in North Beach, blue water. It was just insane, man. Miami is definitely a beautiful place. I love New York too. New York City is the greatest city on earth by far. But I think Miami for me is a close second, close #2. The wind is really starting to pick up. Yeah, as you can see from the yellow barricades there, this is not yet open to the car traffic because they're still doing the construction. But this is supposed to be some very, very ritzy nightclub. I'm not a big nightclub guy, but supposedly this is it. But team, I gotta run. Thank you so much for joining me on this beautiful night in Miami. I hope you all have a fantastic rest of the weekend. We will be live tomorrow at 8:30 p.m. Eastern Time, maybe live from South Beach. We are going to be doing our weekly Markets a Look Ahead live stream where we'll be covering all of the major events on Wall Street for the week ahead. We'll be talking about some notable corporate earnings. We'll be talking about some major economic data. And we'll talk a little bit more about the currency markets as well as the debt market, the bond market. So if you're new here, feel free to leave a like on the video. Hit the subscribe button if you're new. And we will see you in the next one. Textman, thank you so much for the $10 donation. You are way too kind, and I appreciate all of the support. Dusty Cole, I appreciate it. Andy, our pal from South Korea, thank you so much. Vonda Howard, Greg Peters, thank you for joining. Dusty Cole, all of our moderators. Jimmy, thank you from Montreal. Just Kel 28, Miss Loving Myself, Joan, San Miguel, Marcy, Austin City Limits, Western Mass Dave, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. And I will see everybody right back here tomorrow. Please get some rest. Get excited for the week ahead. We have one more day, Sunday. Take it easy, everybody. That was a horrible outro, but I think you guys can forgive me for that. We'll try to make it better tomorrow. All right, guys, take it easy. I gotta run. I gotta get the bus. Peace.